Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up as we're here now on Tuesday, the 16th of July. It's hard to believe we're in mid-July. The time, well, we're getting on to 4:45 in the afternoon, which means these boards in about a minute or two will start disappearing. What's the one thing you see behind me? The color red. Lots of red. So we saw corrections in energies. We've seen the corrections. You're still adding yield to the bonds and the notes, which is interesting because the dollar was up today, and often you get the yield going up. What does that mean? Is that supportive of the dollar? Well, maybe that's what the market thinks. The grain markets, as the weather has at a key critical time, it's good for what crops got planted. They were lower. When we looked at the energies, they got really slammed when the president today in a cabinet meeting that he invited the press into said that we're still very far away with China on the trade negotiation. But I almost started laughing when he said that he and Mike Pompeo, our Secretary of State, they're talking to the Iranians about missiles. It literally was a minute, and a tweet came out from the spokesperson for the Iranians. They are not giving up their missiles. They are not doing any of that. So again, I don't know what reality is and what it isn't. We saw a correction happening in the stock market today. Did I not mention yesterday we might be ready for what we call that Tuesday reversal because we've had a nice rally in the market. So let's go to the market and understand where we're at. You're down 8.5 points on the week. That was your highest close, and you've backed off. Still not looking very bearish if you look at the chart. The market did not make the higher high and then break down. It broke down instead, which keeps the play of the pattern higher lows, higher highs intact. Now, to break that pattern, you'd have to take out 29.9250, which can be done. That's 18 or so points away. It's not all that far. The 18-day average, a bigger support zone for the market, is at 29.73. That's fairly far away from where you're at. And the Bollinger Band, you couldn't get to it today. Now, you don't have to always hit it. But when you do, it's a sign of strength. And number two, it's a resistance point as well. But visually, you're still very much in that uptrend. And you have not lost the embedded reading. What does embedded mean? Momentum oscillators point up and point down. You know that. They typically get overbought, oversold. But they can also lock in. Locking in is different. Some of the studies do them, some don't that use oscillators. This one does. And as long as the two lines that make up the slow stochastic oscillator, which are the red and the blue in this case. By the way, the difference in the formula of the two is one uses 3 days, the other 5. That's it. That is the whole difference in the formula. Now, different people use different look backs. Some people will use a 14-day look back, others an 18. I've seen 20s. It depends how reactive you want the slow stochastic, the whipping of two moving averages, if you think about it, going with each other. Right now, as long as they're both over 80, I say the market is locked into a bullish phase, and the pullbacks in the market are probably going to be well supported. Lose that red line under 80, and then I look for price in the 18-day average to make an attempt at each other. The last time that happened, it didn't work that well. It came down, but it never got to that 18-day average. More times than not, it does. Go on your charts and do your study. The chart that I'm a little more bothered by was how the NASDAQ acted today, because this is called a key reversal. It is the highest high of a move. It happens to be the all-time high in this market. It not only made the all-time high, it broke down, had what we call an outside day down, took out yesterday's low as well, and closed under the opener. So you have what's called the potential for a trade, beginning of a trade top in the market. That's all that I could say. Take out today's high, throw that theory out the window. Got it? That's how I'd look at it. But again, you have the embedded reading, and that to me is more important than the action that happened today. This rules the day until momentum goes away. I am of the school of thought that momentum leads price. Price does not lead momentum. When I come to the Dow, Well, we've talked about this. You had 2 days over the upper Bollinger Band. Now you're pulling back to the other side of it. You finished today at 27,328. The upper Bollinger Band is 27,356. You got today to 27,396. And I think the pros, as I said here and here, I think they don't get long over Bollinger Bands. Now, today you did something interesting too. If we look at this market and go to yesterday, Monday, then the day before, and the day before, you have a 79 reading. The numbers weren't over 80 there. Where the third set came in was today. So this is the latecomer to the party to get the embedded reading. So therefore, from my perspective, until it gets under 80, it's probably one of the stronger of the indices because it's sitting at the upper Bollinger Band, it's not backing away, and it's just embedded. In the Russell, this is the weaker of the indices. I say that because the battleground has been the 100-day average in green, the 18-day average, and it's really a sideways market. Even momentum is pretty sideways. Are we trending? No. You have a pattern of a lower low and a higher high in a sideways market. If it drops away from here, it might even decide to challenge, it's hard to say it, the 200-day moving average, which you don't even have in play on any of the other markets. So I think that's fascinating that you have that there. In the VIX is trying to establish getting back up. Today's range, if you look at it, it's an outside day up. The market is oversold, not embedded reading. If it gets a rally here, maybe you can get back into the resistance of the 18-day or 100, but for it to go up, typically the stock indices are going to go down. So it is another warning sign. It didn't quite make it to these lower Bollinger Bands where I think the put writers would have loved to have done something in that. In the bond market, you're just hugging this lower Bollinger Band. Now, if you take a look, this is when the market, of course, we had that week with the Fed, and they were telling us the change in philosophy is what I'm going to say. Well, you got a bit ahead of yourself. You were closing under the lower Bollinger Band. Yesterday you moved back to it, and today you're back to riding it. Still a bearish pattern, but an oversold one in the market. And I think hearing Jay Powell speak in Paris today, as he's still plugging away, even with the new economic data that's coming out, it sounds to me at least like the Fed is not changing its course, and the Fed is going to have an interest rate cut on July 31st. I haven't heard anything to sound different. Can I guarantee it? Of course not. I mean, I don't know what the Fed's going to do or not do. Know as much as the next guy, but I know what I hear. Lower highs, lower lows, riding the lower Bollinger Band in the 10-year notes. Remember, the lower you're going down, the higher yield is coming into this market. When we come to TLT, the popular ETF for these, lower highs, lower lows, riding the lower Bollinger Band, and oversold. So you got to be a bit careful here. If you take out Monday's high, and let's see if I can get to it. I got to come back to get to it sometimes. There we are. Of 131.05, I'd be surprised if you don't set an even more short covering and maybe even make a run back to that line in the sand, the 18-day average, as the market figures out what it wants to do. Do not lose sight that we have an ECB meeting coming up. I think it's next week. And then we also have on the 31st, we have the FOMC going to make its announcement as to what their monetary policy is. In the dollar index, we had come down to the 100-day average yesterday, and we've bounced away. In fact, it's a heck of a bounce, almost 50 points today. I don't know what's behind that. I know that you've got a higher high, lower low, and an overbought condition. When I look at the eurocurrency, you have a downtrend. You've got lower highs, lower lows. It seems that the word is coming out that the ECB's next step is going to be to lower interest rates. Again, they're already in negative territory, so they're going to make it worse negative. I think the only thing that's going to work there is QE in some manner, buying bonds from them or seeing government spend money in some way to get something going. But this market, unlike the dollar, is in a downtrend. It is oversold. Will it get down and make a new low for this move? That's going to be the question. If I step back here, you can see where the market was before. It's certainly not looking good. The British pound, forget it. They're telling you already in a debate last night that whether it's Jeremy Hunt or Boris Johnson that becomes the next prime minister, they're ready to go. As prime ministers, they're ready to have a Brexit, a hard one. Market reacting to that right away, down a full cent here. And these are new lows for this move. So it gives you an idea of how dysfunctional everything seems to be between Parliament and whatever the PM's going to be. Can you imagine a hard Brexit after all this? In the Japanese yen, the confusion to me today came that there was no one really running to this for safety as you get all these other parts. You still have the 18-day average as the resistance. You've hit it now 4 days in a row. You just waffle against it. You have the swing line with higher lows and higher highs, but momentum is flat and bias is still to the downside. A close up and over 93.20 could be, in fact, just getting over that number might be a warning that this market's ready to move up. And again, safe haven currency. Bitcoin, did you listen to any of the Senate or House questions today as they were talking to the Facebook people? If you think a coin is coming right away around the corner that our government's approving, I think price is telling you what's going on there. I don't think that's anytime soon from everything I was hearing. You are oversold. Will you make it to the lower Bollinger Band's the question. But you peaked out in this market at 14,170 2 weeks ago, and the volatility in this has not gone away. It's at 97.30, and I had to love the question. Facebook isn't able to control the videos up there. How are they going to control people's money? That's the simplicity of what's being asked. Pretty interesting. Okay, we get to Brent and WTI crude. The market had a spike up. Now it's coming back, and you're still dealing with a lot of weather-related issues here. You're fighting back, and you can see. Let me put this on. This was yesterday, and we had a reversal. So we had lower highs, lower lows. The market had come back to the 100-day average. It was just under that number by about 15 points. And today, bing, right back to the 18-day average area, where now it's got to figure out what it's going to do next. Same thing happened in WTI. Same type of play as I see it. Gasoline, same play. Weren't we just saying yesterday, if it continues down, maybe the market can get to the 18-day average in the 100. You lost an embedded reading, which means often when that occurs, price and the 18-day average make a run at each other. Well, it didn't work in the stock index I showed you, but here's a classic example of it actually working. In nat gas, right back to that 18-day average area. This rises over, and now you got to be careful. You're entering that seasonal time of year where it gets a little funky here, and on a seasonal basis, I can only tell you what history did in the past. This is an area of time where you get a bit weaker prices. So the uptrend ended. Obviously, none of the energies liked what Barry brought to them, and that's what we saw. And I'm talking Hurricane Barry. As you can see, they've cleared the boards behind us, but I'm not through. You get into markets to do these transitions, and sometimes the best way to trade it is in and out using futures. Futures are not stocks. They're not stocks in any manner. Stock indices are made up of stocks, but they're volatile as can be. And a lot of people like to look at these markets and figure out, I want to go in, I want to go out. And these micro futures that they've developed on all the stock indices, they've exploded in their size. It's the most successful contract I've ever seen launch in all four of them. They don't have a little bit of volume. They have a lot of volume. And what we're seeing is traders are using them for these, figuring out if they're long in a big contract. Sometimes instead of coming out of everything, they're using these to offset positions. There's certain fungibility. You got to talk to your broker about it. It's very fascinating. And people, because they're so liquid, they are using them. They track right with the big boy stuff, and away you go with 1/10 the risk per contract, 1/10 the margin per contract. So something you want to look at. Does it lend itself to pivot points? Well, maybe pivot points lend itself to that. But we've got a 3-point video series that you watch. You learn how to work with the pivot points, what they're about. And then I recommend you open up your chart, put them on there, and see what you got. How do you get this from us? Well, it's free. That's number one. All you actually have to do is go to our website at www.iraepstein.com. One of the videos, by the way, will contain momentum, which most people don't do when they use this study. So I've given you the 3 parts, show you how to work with it. You can call us, go to our website, pivot points, go here. It'll take you right to that page as well. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.